Hello and welcome to Season 2, Episode 14 of the Talking Central Banks podcast with me, Karan Medici. This platform is exclusively dedicated to everything central banking, monetary economics, and policy technicals for observers across the world. Today, we will be talking about the geopolitics of central banking and the macro implications on the making of monetary policy amidst volatility and crisis. This is in the context of the Iran situation and the precedent Ukraine crisis and the impact on global sovereign relations, trade, logistics, inflation anchoring, and expectations. Arguably, a situation like the one prevailing is the biggest test for any central bank worth its salt. As the ghost of Mundell-Fleming trilemma haunts policymaking every time policy is redirected or optimized. Our guest tonight is Tina Fordham, a Wall Street legend who was Wall Street's original Chief Global Political Analyst, spending 17 years at the Citigroup. She created Eurasia Group's financial markets research business, was appointed to the United Nations' first high-level panel on women's economic empowerment, and has served as a senior advisor to the UK Prime Minister and 2- and 3-star generals. Tina is a member of the International Advisory Boards of Columbia University's School of International and Public Affairs, which also happens to be her alma mater, and also at Cambridge University's Center for Geopolitics. She hosts the Navigator, produced in collaboration with the London Stock Exchange, and is a frequent guest on CNN, CNBC, Bloomberg TV, and Monocle Radio. Tina's forthcoming book, Mad World, a Geostrategy Survival Guide for Leaders, will be published in September 26 by Whitefox. Welcome to the show, Tina.
Thank you for having me.
You're very welcome. Pleasure to have you on the show. So, Tina, starting with your experience as a geostrategist, you've been an industry leader in the area of geopolitical analysis for institutional investors as well as board and C-suite leaders for over 25 years now. How has the demand side of the equation changed during this period? Also, Tina, what kind of questions are most dominant now compared to the previous periods?
Well, it's a great question because over the course of this 25-year span that I've been working at this intersection between geopolitics, financial markets, and the business environment, the nature of the questions and the kind of the queries that are driving interest in geopolitics have changed profoundly. When I first started back at Lehman Brothers, and working with Eurasia Group around 2002. It was in the aftermath of 9/11, and in the wider context of developed market investors, wanting to invest in emerging markets. And so they were looking at Brazil and South Africa and Russia and India and others. And the question, that they started with at that time was, how long will it take these EM countries to become stable, to become more like us? And I think that really captures the thinking at the time, which was, the build up to peak globalization and the notion that, after the Berlin Wall fell and the end of apartheid, the reforms in China, end of Latin American dictatorships, that all these new markets were opening up and there was a certain inevitability that they would become like industrialized democracies. Now, obviously, that hasn't been what's transpired. And so the whole notion of what we designed at that time, a political stability index, seems ridiculous. No one's even thinking, the United States isn't politically stable. But we didn't get to that point until the global financial crisis. And that's when we started to see questions about developed market political risk. For the first time, really, American political scientists did not think about U.S. political risk until TARP, until the global financial crisis, and then the Eurozone crisis. So then, that period, starting around 2008, we had the phase of, what's happening in developed markets. And for the first time, market participants were looking at the outcomes for, German regional elections, because that might have some bearing on the future of Eurozone bailouts. And then likewise, the whole state of the US debt and what might happen on that front. And then, fast forward to today, 2026, it's been an extraordinary year in geopolitics. 2025 was the year, it was the wake-up call, starting with Liberation Day. Markets were not expecting that. They were expecting Donald Trump to behave more like he did in Trump 1.0 with,
Yeah.
deregulation, tax cuts, and the rest of it. And they didn't expect a very geopolitical agenda. And so that kind of arc over this period of, starting out with how to find opportunities in emerging markets to how to navigate developed market politics to the idea that geopolitics is everywhere and intensifying has really shifted. But despite that, you asked what sort of questions I'm being asked. The questions don't change very much because most classically trained economists see geopolitics as a negative externality and haven't really changed their view, I would say, since. So the arc of geopolitics has completely changed. But what I don't see much evidence of is a change in the way that economists and central bankers and policymakers think about
Right.
geopolitics. They still tend to treat it as kind of a force of nature, something almost random that you can't possibly predict, or there are tools that can sort of use data scraping and LLMs to look at spikes. But I think that misses the point, really, because what we're talking about with geopolitics is, in some sense, a function of human behavior, and that's not a closed system.
Right. Very interesting. What about the nature of the geopolitical context itself, Tina? I mean,
Mhm.
how has it changed? Are we seeing more geopolitical risks than that in the previous eras, or does it just feels like that? You can perhaps refer this to your geopolitics super cycle research perspective that you have perfected over the years.
Yes, I mean, you asked what questions people are asking, and one of the most frequent ones is exactly that. Is it the 24/7 news cycle? What kind of metrics can we use to try to understand whether the world is actually spinning faster than it used to, or whether it's just kind of more noise? And of course, market participants are very fond of the signal versus noise construct and tend to dismiss political developments unless they cause, price action as noise. And one of the things that I've been passionate about in my career is arguing against that, because it's more a case that geopolitical developments can be pivotal or significant, but not yet is significant enough to break through and cause a change in trend when it comes to markets. But if you wait until there is that very pronounced signal, you're going to miss out on stuff that's important. And I would argue, for example, that the annexation of Crimea in 2018 was an example of that. It was dismissed at the time as a tempest in a teapot, but of course, that development in Ukraine with the Russian annexation of that piece of Ukrainian territory actually normalized and paved the way for the war that we have now. And that kind of speaks to, I suppose, the friction or the tension between the way political scientists look at these developments and again the way economists do. It didn't cause a systemic change in asset prices or a growth shock, so it doesn't really qualify as a market moving risk, and yet it was a pivotal development that has gone on to have significant impact. In the geopolitics supercycle, what we wanted to do was try to find a way to address empirically that question that people were asking, is it my imagination or is this really happening? Because, for board leaders, for example, for corporates taking business strategy decisions, the impulse has been to think in terms of mean reversion, and mean reversion has got you through most of the last several decades. That and QE from central banks, which has buffered
Right.
the impact of what we might want to call bad news. So what we did was look at the period between 2010, so the tail end of the global financial crisis, and the end of 2024, so about 15 years period, and we looked at a range of shocks that you can quantify. So the number of conflicts, incidences of civil unrest, cyber attacks, climate change events, and probably most significant for this audience, economic statecraft, the use of tariffs and sanctions and tools. And of course, there are databases, publicly available sources, where you can find these factors individually, but we brought them together, looked during the course of this period, and were able to conclude that the period between 2010, beginning of 2025, saw a tripling of geopolitical risk events. In other words, preceding Trump 2.0, for those who may be inclined to say that much of what's happening now is a result of US policies, to that, I would counter that White House policies may be inflaming the geopolitics supercycle, but it didn't cause it. They didn't cause it. And with that in mind, the Republican Party leaving office is not also likely to kind of return the world back to normal. But overwhelmingly, in every boardroom, every CIO dinner, a debate breaks out on this precise point. Is this going to pass and we will return to the status quo that we've been used to during this kind of period of peak globalization that most policymakers and business leaders grew up with, or are we moving towards something else?
So can you explain this concept of super cycles, Tina, as you understand them in your research?
Well, I mean, I've borrowed the term because it's familiar to those thinking about the commodities super cycle, but it actually originates from astronomy, and it refers to expansion. And so with that in mind, I think it aligns very well with what I sought to isolate. It's an extended period. It's a structural change in trend and not cyclical. And that really flies in the face of the conventional wisdom in terms of thinking about geopolitics. And I don't say it lightly, but I feel that there is still a lot of resistance to this idea, despite the fact that so many people will approach me and say, well, you must be busy because geopolitics is everywhere. There's, I think, a very deeply held belief that things don't change that much, and that that this era of globalization and the sort of the post-Cold War moment will continue, and yet there's not a lot of evidence to support this.
Right. Thinking about 2026, Tina, you've said that the year started with a bang with the Venezuelan operation that removed Maduro, followed by President Trump's open ambition to buy or seize Greenland, and then the Iran situation. Can you talk about the disconnect in the market response versus the extent of the geopolitical shifts that have been materialized during this time?
Yes, I mean, I've got a take. I think many of your readers will have others, and you might as well. I think the conventional wisdom is just simply that U.S. equity markets are performance is fueled by the Magnificent Seven, and that this kind of drowns out, almost acts as a fiscal stimulus effect on markets, buffering the impact of particularly the war in Iran, which let's remember the head of the International Energy Agency has said was the biggest energy shock since 1973. It was quite a big statement. Now you can suggest that the global economy is not as dependent upon energy supplies coming from the Gulf as it was back then. Obviously, U.S. energy independence is another factor that feeds into this. But there's no getting away from the fact that we've had, several years, starting with 2022, the full-scale Russian invasion of Ukraine, then the October 7th developments, 2025 short war on Iran's nuclear facilities, and then in 2026, Venezuela the Greenland developments, which didn't turn into a conflict. But, to my earlier idea that some developments are pivotal, even if they don't kind of move markets, the Greenland, threat slash offer from the US focused minds in Europe and for Canada, for example, and Mark Carney gave that, very important speech in January at Davos about the rupture, not a transition. These developments coming on the back of, as I would put it, the super cycle intensifying have started to impact flows. And that's what market participants will be looking at. Now, FDI
Right.
flows is just one example, and they tend to be lagging. But the notion that investment is now kind of, following geopolitical alignment is another example of a change in trend from, purely optimized portfolios
Yeah.
and supply chains. Friendshoring was maybe the first concept, but we are starting to see changes in portfolio allocation, and this is hard, frankly, for my fellow Americans to make sense of. They just don't
Yeah.
buy it.
So, in my opinion, Tina, the Greenland episode had some serious implications on the future of NATO and how European nations view NATO at this point in time. What do you think would lead to in the near future?
Right. So the designs that President Trump has on Greenland have ranged from buying it to annexing it to attacking it. And this came as a great shock to Denmark, which it has Greenland as an autonomous territory. And Denmark is a founding NATO member state,
Right.
has always considered itself a model US ally, sent soldiers to fight alongside US soldiers in Afghanistan when
Right.
NATO triggered Article 5 for the one and only time, which was to use the collective defense
Mm.
guarantee to support the United States. So they were really taken aback, and the tensions and the kind of fluctuations in the U.S. Europe and the relationship between the NATO member states has been periodically difficult. But that development really focused minds. And
Right.
let's recall when we're thinking about NATO that it was some years ago that the French president Emmanuel Macron said that NATO was obsolete. Well, that's turned out to not be the case. NATO has added two member states, very significant member states, Sweden and Finland, both of which had previously, resisted joining because of tensions with Russia. And recall
Right.
that Finland had a long war with Russia. They
Yeah.
share a very long border. But between the United States and its threats to Greenland and Russia and its threats to the Baltic states and the Nordics, Europe, the Americans like to say, has Europe gotten the memo? They have got the memo. They are spending more on defense.
Yeah.
They almost can't spend fast enough,
Right.
really, because the question, I think, is less about the future of NATO. I saw a buy-side research piece saying that NATO wasn't going to continue to exist by the end of the year. And it just reminded me of all the things I've seen over the last 20 about the EU is going to break up and NATO is going to break up. That is not what's going to happen. The EU is not
Right.
going to break up. It is enlarging, and NATO is not going to break up. It has expanded. But what is plausible, if not likely, is that the US will, whether formally withdrawing or less formally, kind of de facto, not perhaps, meeting its spending targets or otherwise sort of ramping down its participation. That is more likely. The United States doesn't need to withdraw from NATO in the same way that it doesn't need to withdraw from the United Nations. It can just
Right.
simply do less,
Hmm.
um, spend less and maybe
Yeah.
put sand in the gears so the functioning is lower. But markets tend to be very binary, right? And say, well, it's on or it's off. It probably isn't going to work out like that. But as a collective defense organization, NATO is very successful. And if you look at the summit in Istanbul, look at the additional members who were invited from the Asia Pacific. That
Right.
tells you a lot. The so-called middle powers that Mark Carney spoke about, in an environment of, U.S. either, withdrawing its historic security guarantee, which isn't only about Europe, it's also about Japan and Australia and South Korea and Taiwan. There's safety in numbers. So
Right.
big organizations like NATO and the European Union are more likely to strengthen. And that's the opposite of what I think the American and Wall Street impulse has been.
Right. Very interesting, Tina. In your recent notes to your clients, you've talked about your observations from being in Washington this spring at the SEMA for CEO Summit. That the disconnect between American business leaders' perceptions and the rest of the world has never been wider. Can
Mhm.
you elaborate on this, Tina?
I mean, I can, an American who's lived outside of my country for a long time, I have what social scientists call the inside-outside problem. So I'm both American, but live in a lot of different
Right.
contexts.
Mm.
And I think that the tremendous wealth effect in the U.S., which is not,
Mm.
other countries, other even industrialized democracies really just don't compare. And the confidence and the huge optimism around AI, again, the Magnificent Seven and those companies, is leading to, such bullish sentiment in the U.S. And at the same time, American foreign policy, like the war in Iran, I mean, yes, it's hurting, inflation and consumers in America, and it's putting up gas prices. But the biggest impact, the biggest economic and inflationary impact of the war is not being felt by Americans. It's being felt again in energy importing countries that are reliant on the Strait of Hormuz, and that's U.S. allies in Asia Pacific and Europe, also Gulf countries, taking a hit from all of this, and then the impact on the outlook for food and agriculture supplies with
Right.
fertilizer and other shipments also not coming through the strait. And I do think that Americans, to use this expression they use to talk about Europe, haven't got the memo about how much damage other
Right.
parts of the world are having to absorb
Right.
because of U.S. policy decisions, and that doesn't, it isn't no cost. You can
Mm.
see you can see it in the data, the decline in trust in the United States, and for the first time, you can see the public trust growing for China. That will have investment implications, not immediately, but over months and years, as long as China doesn't do something to spook everybody,
Yeah.
China will benefit from that. And I don't think Americans appreciate the consequences of these actions in terms of the U.S. global reputation and trust.
In this context, Tina, can you talk about the meeting that just happened in China between President Trump and President Xi?
Well, the Trump-Xi meeting was an important one in the diplomatic calendar. It was the first
Mm.
U.S. state visit for quite some time. A very important, VIP U.S. business delegation accompanied President Trump. Lots of pomp and circumstance and lots of, the Chinese equivalent of Kremlinology, who sat where, the height of the chairs, and all of
Right.
these sorts of signaling. Um,
Yeah.
but my shorthand for all of this is a phrase that Trump likes to use from poker, which is who holds the cards. And
Yeah.
Xi Jinping is, he conducted that visit as if he holds the cards. It can be debatable about whether China is winning or the US is winning, but certainly from the vantage point of the power dynamic, and just how, limited the concessions were to US business, which of course was there hoping for Chinese markets to open. Um, you know, Markets are right to take comfort from the fact that the previous period of more intense trade frictions between US and China wasn't there. The two sides want to have constructive relations. That is only a good thing for the two most powerful countries and biggest economies in the world. But China, whether it's the symbolism of that visit or it's really quite hardball behavior last year on critical minerals, is biding its time. I think it's hard to avoid having that impression.
Right. Looking at the state of the conflicts between Russia and Ukraine and now the Iran situation, Tina, both of which have lasted longer than market participants expected, as you just pointed out, what are the possible off-ramps and time horizons in your opinion? Also, what about the butterfly effects of these wars, that is the so-called second and third order consequences?
Yeah, I mean, we talked a little bit about Greenland, which even though it didn't turn into a conflict, has triggered a number of butterfly effects already. We talked about NATO expansion. You could put Iceland having a referendum to join the EU in that basket, and the fact that the European Union, after 20 years, finally managed to sign a trade agreement with Mercosur, likewise Canada with India. These developments are butterfly effects of that change in trend coming from the US, which was crystallized in the Venezuela extraction and the Greenland threats. There's no other word for it. When it
Yeah.
comes to Iran, the market participants like the signaling. They like it when Trump says that, we're agreeing to a ceasefire, even though there have been periodic hostilities the whole time, and Israel continues, its incursions in Lebanon, and the Strait of Hormuz is not open, apart from the
Right.
25 or 26 ships that Iran has allowed
Yeah.
to pass. So I think, you can just see that markets want to look through the Iran conflict, and here we are, 100 days later. Not only is the Strait of Hormuz not open, but Iran has achieved something, gained something that it didn't have before, which is a loaded gun pointed at the global economy in the form of a toll booth over the strait, an international waterway, and something that wasn't there before. So the goal of the Israel-US war in Iran, although it was kind of a moving target to start with,
Right.
was to change the power balance in the Middle East, and that conflict really has changed the power balance, but not in the way that I think that the planners were hoping. Iran is
Mm.
stronger. The UAE has left OPEC. I think it's highly unlikely that Saudi and the UAE will sign the Abraham Accords, which the White House is hoping for.
Yeah.
We've seen the
Mm.
limits of coercive diplomacy on the
Mm.
Iran war. And I think if we
Mm.
look at the Russia-Ukraine conflict and the war in Iran, we've got to look at the fact that in both cases, markets expected that the war would be over quickly
Yeah.
because of the presumed military superiority. Russia in the Ukraine case, the US and Israel in the Iran case, and that just hasn't happened.
Mm.
And even bigger point, Ukraine is actually emerging as a military superpower in the region, and who could not be struck by the symbolism of Ukrainian President Zelensky walking on the red carpet in Syria and meeting with Gulf leaders to share Ukraine's expertise on Shahed drones, that
Yeah.
Russia was using from Iran against them. So
Mm.
the tables have turned. I mean, the US is, of course, the biggest superpower in the world with the biggest stock market, but it doesn't mean that that sheer kind of weight and concentration of force is allowing Washington to achieve, so many objectives in a short period of time.
Mm. I personally call this a war of proxies, given the fact that there's so many proxies and the principles involved in this war. I don't know who's winning and who's losing.
Well, we won't know for some
Mm.
time, and we do tend to be quite impatient. If we look, for example, at the Soviet Union's war in Afghanistan, which is
Right,
widely regarded as being, kind of the straw that broke the camel's back for the Soviet Union, it took 10 years for the impact of that to
right,
register. So whilst in some ways and in some phenomena, the world is turning faster than ever and you can do certain things faster than ever, other things are still slow. Conflict resolution is
right.
slow. Um, Conflict resolution is especially slow if no one has surrendered. And this is what we see in Russia, Ukraine, and also what we see in Iran. Trump had stipulated, total capitulation. Iran thinks it can wait it out because they
Yeah,
have strategic patience. They're not that bothered if their own people suffer. We know this because of the punishment that has been wrought on the Iranian people already. And in that sense, it's a game of chicken, and they're anticipating that, they can hold out longer and that Washington needs a deal more than they do, which is why I think it's a summer of unforgiving geopolitics rather than the sorts of resolutions that market participants are hoping for.
yeah. Very interesting, Tina. By the way, why do you think markets, central banks, and business leaders consistently minimize geopolitics? Has the penny finally dropped, or do we need to see a dramatic one or two standard deviation event before that actually happens?
I mean, you certainly see central bankers making more reference to geopolitics, and it's always been the case that the geopolitical risks that became systemic, which is a rare occurrence, has been a rare occurrence, to be fair, uh, did make it onto the radar of central bankers as risks that could increase inflation and potentially cause a growth shock. And it is notable that we haven't seen that yet here. But if I'm right, and the Strait of Hormuz, either doesn't open quite yet or opens and closes sporadically because Iran now has this power to control it and monetize it, then there'll be a period of adjustment. I mean, there also will be workarounds, so to over time to probably to decrease dependence on the Strait of Hormuz as a waterway. But in answer to your question of why do they do it, because it's very difficult to quantify. And I would say it's a relic and a luxury belief of the previous era that you could just park geopolitical risks in a column that didn't fit into your model. And I would go further and say that geopolitics is now driving the investment environment, not only in terms of risks, because if we look at the AI trade, metals and mining, precious metals, commodities, agriculture, infrastructure, defense. This is all about competition, and that's what geopolitics is all about. The United States wants to, overtake China, and this is a major driver of U.S. policy, for example, toward data centers and kind of relaxing the constraints for big tech and AI because of that desire to compete. So
Right.
I would say we've got to reframe the entire conversation around geopolitics away from this, fairly kind of, legacy idea of sporadic, hotspots that might cause a little bit of a flutter to something that's, now part of the environment.
Right. Regarding the US monetary policy, Tina, I think the FOMC is a divided house with no clear signals on rates. And the dot plot is right now making no sense at all. Nevertheless, in my view, at least two rate hikes are warranted given the geopolitics, along with the strength of the US economy turbocharging inflation expectations. Now, Kevin Warsh might be perceived a dove and may build an FOMC consensus to keep Fed fund rates lower in the medium to longer term. But the current outlook will need a more hawkish stance on the contrary. This is pretty much in line with most G20 major central banks trying to contain the demons of currency depreciation, capital flights, and the de-anchoring of inflation expectations. Given this background, Tina, what are the learnings for global central banks on rates and policy making from the geopolitical events perspective, and that have been tormenting the global economy since the Ukraine situation?
Well, I mean, I'm very careful not to get out of my lane and
Right.
make calls on the rate cycle. But I
Mm,
think part of the answer to this question depends on some of the themes that we've touched on about, how do we know this is real? How do we quantify, the if the IEA chief says that the war and the closure of the Strait of Hormuz is the biggest energy shock since 1973, Brent is still under $100 a barrel. So, there are a lot of surprising disconnects in the picture. I do think that the inflationary outlook as a result of these conflicts, the impact is much more pronounced in EMEA and Asia Pacific
right.
than in the United States. And that's going to result in a divergence. You've seen different language coming from the European Central Bank and the Bank of England, haven't you, than the Fed. And the Fed is also, even though we don't like to say it and we don't want to say it, they're under pressure with midterms coming up. We know what President Trump thinks and wants the Fed to do, and
Right.
he sees it as political if the Fed doesn't cut rates. So, they under Jay Powell have had to walk a very, careful line, haven't they, to not inflame the ire of the White House, and to,
Yeah.
to really, I don't want to say wait and see, but they're not going to preemptively, I don't think, price in geopolitical risks. If every weekend we have this Groundhog Day, it seems, during the Iran war, where we're waiting for Trump's signature, and on Monday morning, is he going to say it's not acceptable or it's acceptable? I have a feeling it's going to be not acceptable. Iran is demanding
Right.
reconstruction, for example, after the damage that it's suffered. I don't think that's likely to meet with the president's approval. And this is what Iran is very good at, saying yes in the moment and then adding on new demands. That's going to annoy the president.
Right. So a question that comes to my mind, Tina, is that how much of what we are seeing now is due to US policy uncertainty? With that background, what kind of impact might the US midterms bring in November? Do you think the US will ever return to being the guarantor of the global security and trade order of the past 50 years?
Well, it's such a profound question. And for
Mm.
political scientists and historians, of course, we talk about the period of the Pax Americana, and the post-World War II order that the United States created, invested in, supported with its military, based on the core idea that what was good for America was good for the world, and that rising prosperity and the benefits of prosperity and free trade, democracy, human rights, all of that good stuff, which President George W. Bush talked about very passionately. These were not left or democratic ideals. that was a net positive. And U.S. public opinion has moved away from that, and it doesn't solely reside in President Trump. So for non-Americans who are puzzled and confused by the change in U.S. stance, and by extension think that perhaps Republicans will, suffer at midterms and perhaps lose in the next presidential elections in 2028. I would just say that I think that the change in U.S. public attitudes really goes beyond Trump and goes beyond MAGA in terms
Yeah,
of the sense that the U.S. shouldn't have such obligations, and that other countries should do more for themselves. I think that runs quite deep. And, to use the language of the markets, the benefits that the United States has enjoyed as a result of being the guarantor of the world's, waterways and the trade agenda is priced in. Nobody
right.
remembers a time when that wasn't the case. And so I do worry that we are in for, not just a 1 to 2 year period, but more like a 5 to 20 year period of recalibration, of China looking to benefit from, the advantages that it's built and nurtured and accumulated at, the expense of what it regards as U.S. short-term thinking. And there's nothing like volatility to really invite opportunistic actors to make a move, whether that's, China on Taiwan, or, other countries that aren't happy with the shape of their post-war borders. We don't have to go too far to think about Kashmir, to think at the skirmish last year between Thailand and Cambodia. These kinds of border disputes are everywhere. And
Right.
if there isn't the risk of the United States sort of getting involved, I think we should expect to see more of it. And that's what the super cycle research, really, really shows us. It's not just the risk events, it's the drivers, which includes climate change and climate change event. It includes more open corruption. It includes lower public trust. Those are drivers. Against weaker guardrails, whether that's rule of law and governance or global diplomacy and international institutions, heightened drivers, weaker guardrails, more risk events. It's quite an intuitive framework that we used for the geopolitics supercycle. And I hope that it's helpful for people to kind of structure where we are, because it's not random. And I think
Yes.
that's my kind of it's a hill I'm going to die on.
Great. So,
Uh,
Tina, recently Bloomberg Markets John Authors, while praising your forthcoming book, Mad World, a Geostrategy Survival Guide for Leaders, said, and I quote, Tina Fordham has long been an invaluable and distinctive voice in the debates over geopolitics. She is brilliant both at distilling which issues matter and which can be ignored, and in making the importance emphatically clear to the powers that be. In a mad world, she is a vital voice of sanity. End quote. In this context, Tina, you've had a very unusual career trajectory, which you describe a little bit in your book. Can you share some highlights about this book with the audiences?
Sure, I can say a little bit about it. I have had a completely bonkers career. I started my pre-finance career looking at the post-communist transitions in Eastern Europe and the former Soviet Union, really just out of intellectual interest and human interest to observe how rapid transitions from different systems impacted people from the grassroots up. And
Yeah.
that really informed my perspective about how geopolitical changes can happen seemingly overnight, as was the case with the fall of the Berlin Wall, where suddenly
Yeah.
people were pouring over the border and the system was just finished. And even weeks or months before, you would have found very few people who could even have imagined it.
Hmm.
So the change can happen quickly, but the adjustment and the sort of new paradigm actually takes quite a long time to settle and to emerge.
Right.
And these lessons really stayed with me, and I've brought them through to my work, which, let's be clear, it does lead to a lot of battles with market participants. If you're a currency trader or a rates trader, you've got data points and, you have probably more data than you've ever had before. And then someone like me comes along and says, well, the average duration of a conflict is 4 years, and it doesn't compute, because of that, I guess, friction between market trends and the global environment. And we are now at a period where human behavior and this competition between great powers as well as middle powers who don't want to be rule takers. And I can't
Right.
emphasize that enough. Canada and India and Mexico and Brazil and Europe and Japan and Australia and Nigeria and South Africa do not want to be taking direction from the United States and China. They want to act in their national self-interest.
Mhm.
And for all of the kind of, I think, almost hope in some ways from market participants that we'd have a superpower tripartite world that would be orderly, we're not heading that way. We're going to see the middle powers look to bolster their own security and stability. It's going to impact investment, and it's already translating into just a huge wave of M&A. It is partly because of geopolitical competition, but I think that people don't see the trends for what they are. And so in terms of my career, I was one of the first people to say that geopolitics was distinct from economics. When I interviewed at
Right.
Citibank with Stan Fisher, the late Stan Fisher, who was head of country risk and of course went on to be head of the Central Bank of Israel, I remember the
Right.
conversation I had with him, and
Hmm.
he said, but our economists do this.
Hmm.
And finally he agreed to let me do it, but it was against his better judgment because economists also covered politics.
Right.
But I pushed back against that idea, and well, I think I was right. I think events are proving me right that we
Yeah.
need a different prism, and we need to develop more indicators and more frameworks for thinking in a systematic way about geopolitics.
Wonderful. So, who are the projected audience of this book, Tina? And what are you planning to achieve from this project? You can perhaps talk about your firm, Fordham Global Foresights, connecting the
Mhm.
dots here.
Well, so the book's intended audience is the same audience as my advisory firm. It's decision makers, senior decision makers. Fordham Global Foresight mainly works with C-suite leaders and boards, as well as institutional investors. Increasingly, I'm doing executive education and training. That's something else that's new compared to previous eras where I'd be sort of wheeled out to talk about what might go wrong in the world. Now, I think leaders realize that they need to be better equipped for thinking, but this stuff isn't taught at business schools. So I am working, for example, with Columbia University, my alma mater, to develop some offerings that are more structured and evidence-based for leaders. I also work with the military. Obviously, they
Right.
know a lot about geopolitics in one way, but for most of us, you just haven't had to have a mental map of the ecosystem, if you like, of the way the world works. The
Right.
furniture of the international system, as Henry Kissinger would talk about it, just didn't come up in the boardroom. It was all about the opening up. It was all about where the new emerging markets, middle classes would be found, where prosperity would lead to the ability of more US multinationals to find new markets. And now we've got something that looks quite different. And that in itself is quite old school. We really don't know what the impact of artificial intelligence will be on the job market, and on, let's say on the socioeconomic outlook. And very little time has been spent on that. I mean, these are the kinds of questions that interest me the most because they're hard to quantify. So they do get left out and they do get ignored. But I think all
Right.
you have to do is look at the response to, Pope Leo's encyclical on AI to see that there is a huge appetite actually for, you know, sort of deep thinking about where the world is headed. Maybe not by everybody, but we do understand that between geopolitical volatility and huge variables like artificial intelligence, the world of 5, 10, 20 years from now probably won't look that similar to the one that
Yeah,
we grew up in.
agree, agree. In your travels and conversations with global leaders over the decades, Tina, what insights have stayed on with you? Also, who have been your biggest influences?
Well, I mean, I really like to try to learn from every audience and every group of people that I meet. And so one of the things that's a bit different about my approach is that I try not to just lecture. I always start by asking questions, and I always ask audiences or small groups like boards or leadership committees, um, about what they think about the state of the world because it's so telling. So it's really simple, but I ask every group whether they think the world is getting better or worse, and whether it's better now
Right,
than it's ever been or worse than it's ever been. And the pattern is I think it's counterintuitive. It's the people in the richest and most stable countries that think the world's worse than it's ever been, and it's the people in places like Brazil and South Africa, who are more positive. And I think that's fascinating because we tend to believe, that affluence and political stability brings with it a kind of a contentment, and that does not seem to be the case. And my own explanation for that is momentum, a sense of positive momentum, even if it's from a relative lower base, does lead people to be more optimistic. So there's that. It's the idea of really engaging and trying to understand, what people's starting point is for thinking about the world. Some sectors like commodities or defense, very sophisticated about geopolitics. And yet, as one of the CEOs of a European energy firm said at the Semaphore event, he said, we had war gamed the Strait of Hormuz being closed for 20 years. We didn't expect it to happen. Right. And
Yeah.
that, I've experienced that for myself, working on topics like Brexit, for example, here in the UK. And even though I was talking about it every day for months, and even though I said in my research that it was a very plausible outcome, I was still shocked. And people misunderstand when I say that. It's just that you can work things out in your research, but it's not the same as living them, and living with
Right.
the consequences. And so there's an idea of surprises that are sorry, shocks that aren't surprises. And
Mm.
there are more and more of these. And so what do human beings do? I think they normalize. They try to, to live with it. And that may not be what needs to happen, in a world where the stakes are so high. So the news avoiders and the people who want to say, that geopolitics is depressing, I mean, I get them. I haven't been in the sunniest mood myself for the last year or two. Um,
Yeah.
but we have been through periods like this, and it's also where people from EM countries,
Mm.
they're used to it. They deal with inflation. They've dealt with upheaval. It doesn't stop them from investing and doing business, right? They just get on with it. And so I think we all could learn to be a bit more, like people in emerging markets who don't wait for the dust to settle. They just get on
Right.
with it.
Yeah. In this context, Tina, what do you suggest we read to improve our information diet? even though you often say that geopolitics isn't news and current affairs.
Yeah. Yes, well, I mean, I hope it's I hope it's good news that I'm not suggesting that everyone become a news junkie because it
Mm.
doesn't help you. For example, I rarely watch television news. Um, I do look at survey data quite a lot and kind of more academic pieces. I realize that's not for everyone. I will have a section in the book on recommended resources. I also find that people really have resistance to paying even for news. And, if
Right.
you're not paying for news, the expression, if you're, if you're not on the whatever, you're on the menu, I forget what it is now. If you are not paying for content, you are
Mm.
being sold stuff.
Yeah.
And the resistance to paying even for newspapers, I find remarkable. I mean, people will pay for their Bloomberg and that sort of thing, but they're not going home and reading it. So
Yeah.
the advent of AI slop, frankly, the TikTokification of politics is I feel almost certainly going to lead to people engaging less with the
Mm.
world around them. And it's
Yeah.
something that I worry about. But, I'm a big fan of Semaphore, for example, which is free to read, very good global coverage. And Factfulness is a book that really influenced me by Dr. Hans Rosling. Came out a long time ago, but one of the things that the late Dr. Rosling talks about is how most of us carry around stereotypes that are about 20 years out of date. And I find that in my work over and over again. It's as if we kind of formalize our sense of the way the world works at a certain stage in our lives and don't really move on from it. And nobody can afford to do that in this environment. We've got to challenge our own biases all the time. And this is what good leaders will do. So I also think that being a zeitgeist leader, understanding the spirit of the times, is now part of good governance.
So finally, Tina, what are the two or three things leaders can do now to boost their PQ, that is, political quotient in the current geopolitical environment?
I think that you've got to bring in geopolitical considerations into your boardroom discussions, even though they don't lend themselves to the kind of traditional corporate accounting approach of being a 0 or a 1. I think you've got to take geopolitics out of the risk bucket and make it part of strategy. And even though it's difficult to quantify, you can be more systematic. There are many open source indicators and others that you can be using. So we've got to look with fresh eyes, challenge preconceptions, and use more data.
Well, on that note, that's all I have for today, Tina. It
Thank you
was
so
an
much.
absolute pleasure and honor to host you on the podcast. I am
Thank you
sure
very
these
much.
I'm sure these perspectives will greatly broaden the horizons of our viewers across the world. Thanks once again, Tina, for the
Thank
time.
you for having me. All the best.
You're very
Bye.
welcome.
Thank you.
Bye.